The market dipped yesterday on inflation fears, but it seems like it bounced back just as quickly as it went down, and it's almost as if nothing even happened. So what's going on, and why is it we got such a bullish reaction? And the answer is very simple. The market, smart money, is very forward thinking, while normies, or the rest of us, are just checking headlines for news. Smart money has already moved on and has already started to make decisions and take action. So in today's show, I'm going to break down what the market sees, why this shift matters, and then towards the end, and most importantly, due in large part to your requests, I'm going to share a specific token that's perfectly set up to take advantage and capitalize on the environment we're moving into. So if you want to be ahead of the curve and know who I'm talking about and where the market's going, then this video is for you. My name is Jessica, and I'm so happy you're here today. And without further ado, let us get started. All right, we're going to take a quick look at Bitcoin. As of right now, you can see Bitcoin has been fighting its way back up to $96,000. Earlier today, it was at 97. It's just been sideways trending, but overall trying to recoup its losses from the initial dip after the Fed's announcements on inflation rates going up, basically. So here we can read by Walter Bloomberg, who goes into greater detail. He quotes a whole lot on the screen here, so I won't read it all to you. But basically, inflation rates went up 0.01% from the last update to the market in December. So this was not favorable, and this also basically means that the Fed, the Federal Reserve, will not be cutting interest rates yet, which of course sends a message throughout the market that it may not be a good idea to invest into risky assets, which Bitcoin is still considered a risky asset. So that's why the market temporarily reacted and dropped. That said, also by Walter Bloomberg, he says that many traders basically shift their expectations of the Fed coming out with any sort of interest rate cut to December, all the way out to December from its original or initial September projected date. So the House Republicans, as I read here, proposed a $4 trillion debt limit increase, which is good because ultimately this would take a lot of pressure off of investors and off the government, because basically it prevents it from defaulting. Right? So give it more time, more air to breathe, not freak out regarding all the debt that it has. And I believe a lot of it is coming to maturation, meaning the government's going to have to pay on a lot of debt whose loan period has come due, that or refinance it. So obviously the House of Republicans would propose a debt limit increase, which is a good idea in the meantime as they're trying to revamp the financial system behind the scenes. And we know that Doge is going through all the departments and just auditing it incredibly. You can actually follow Doge on X to see updates on what they're updating, but it's incredible. So this is a good move. And ultimately, this is going to bring a lot of peace or calm into like the crypto market, which is good because the market does not like fear and uncertainty. So raising the debt limit will bring a breath of fresh air and relief to investors and definitely crypto investors. So keep that in mind as a factor that they're proposing, along with the fact, as you can read here by Toto on X, they point out that the government, or the federal government, right, has also agreed or been given permission, don't quote me on the exact language here, I'm not a politician, on draining their Treasury General account, which is basically like their checking account. This is also interesting because this will give them more funding and potentially more liquidity to cover their bases until they're reviewed next time, until inflation rates are reviewed next time, and they're, either interest rates are cut or whatever the case may be. So this is also a good factor in the long run and in a way. But not only that, as Toto puts it here, we also know that the federal government, sorry, is going to be reducing its what is called a reverse repo. That's actually very interesting and a lot to unpack. And I'm not, like a real super stacked economist, so I wouldn't want to misquote explanations here. But based off of my research, this basically means that the government is lending itself money in a way, but from its own money. So it's interesting. And it just basically also buys them time and gives them more liquidity right now, which is also going to be good for the investor world. Plus, we know that Trump spoke of tax cuts. There are several that are being petitioned. This is also being currently debated, but they're going to be significant tax cuts. All of that, plus now the debt ceiling increase. So it's really interesting. This week overall, as I said at the beginning of the week, was going to be highly turbulent with a lot of news coming to market and affecting us. But at the same time, what has been decided is all ultimately going to be great. It's going to play out great for us. And historically, I was researching today, every time there has been a Treasury general account like liquidation, it's a form of quantitative easing. Traditionally or typically, the market also does respond positively or bullish to it. So based off of that, we can expect some sort of bounce back here soon. And then we have Nick here from Coin Bureau, actually the CEO and co-founder, who just breaks down, just how much Bitcoin and the crypto space and all of us have gone through in the past couple weeks. We know there was the DeepSeek whole chaos fiasco that really took a lot of money out of the market and also affected the crypto market, right? Like it shook Bitcoin and shook altcoins tremendously. Then we had the whole trade war, with Canada and Mexico and now China with, and then like the aluminum tariffs. So there's been a lot of pressure in the market, and all of these factors affect the crypto market. Of course they do. And then of course now we're undergoing or shaking off the CPI data shock. So all of that, or all in all, as Nick puts it here, considering all these facts, and Bitcoin is still hanging on just slightly below 100K, $100,000, and perpetual funding rates are low. So all of these indicators, even though maybe Bitcoin isn't at like $150,000 yet, you should not feel discouraged or feel down or lose faith, because Bitcoin is holding on extremely strong considering it's had everything thrown at it, So overall, we're doing very bullish, guys. But moving on, now starting to segue more into today's topic for you, we would see that the one sector that has been performing really well this month, we know that it's all been about AI as well and AI agents, but overall, hanging on strong, it's been real world assets. And you can see that here. This has been the sector that has been performing very, very well this month. And okay, so the project I wanted to talk to you guys about today is Chainlink. I know many of you are holding Chainlink. I hold Chainlink, and I just thought I would bring you guys an update on what's going on in Chainlink. Most of you holding Chainlink know what it is, but for those of you who don't, I'm going to read this briefly for you. And this is by Zach Rines on X. And he says, you can think of Link as a decentralized AWS cloud. And then a lot of this explanation is a little techy, but essentially, I'm going to show you a chart in this next link. I feel like this chart says it all. This is Chainlink in the middle. And then all around it, this is like some circular Venn diagram of sorts. You would see all of the major crypto tokens and ecosystems and real world assets and big altcoins and layer ones and meme coins. They all essentially have one thing in common, which is Chainlink, because Chainlink basically connects Web3 blockchains with the traditional world, or the world that we're all coming out of, Web2 we call it. It connects our world, Web3, blockchain, Bitcoin, crypto, DeFi. It connects us with the traditional world. And there are some enormous partners. This is also by Zach Ryans. He says, if you think Chainlink is just an oracle for DeFi price feeds, then you have some catching up to do. Link connects banks to blockchains. Let me zoom in on this chart for you as well. You would see Chainlink is already actively working and partnering with Edward Jones, JP Morgan, US Bank, Franklin Templeton, Invesco. It is tremendous. If you take your time and go to Chainlink's website, go to the bottom into partnerships, you will see everyone Chainlink is connected to, and it's unbelievable, guys. Its traction is huge. Not only that, but there are some exciting updates going on in the Chainlink ecosystem. You have their CCIP metrics dashboard now live, which shows everyone holding Chainlink, the actual work they're doing, and how much of it. Because that's what you want to see happen after you invest in a project that says they're going to do all these things. You want to see proof of it, right? So that is what you can see now. You can go to this link here and it'll show you its total value of cross-chain tokens, its transfer volume, its fees paid, where it's live on, like how many chains. You can see 35 chains, how many cross-chain tokens. It's really detailed. This is their website. You can scroll up and you can see all this activity. And it's live, I believe. So that's amazing. And I'm going to play this clip for you. But this is by Null Packets on X. And they say, you're laughing. Swift, like the payment method, Swift, says their platform built on the Chainlink standard. Just think about that. Swift, which is a really big payment processor, built on the Chainlink standard and will inadvertently open 11,500 endpoints in 200 countries to mass adoption of digital assets.
So this opens 11,500 endpoints in over 200 countries, right? So this inadvertently helps with the adoption of digital assets.
Did you catch that? I guess endpoints would be like points of sale, or maybe each one represents a bank or some sort of financial tool or storefront. So you can see the adoption, the real adoption and the real application of their tech. And as you saw a moment ago, basically all blockchains and all traditional finance institutions that are wanting to enter into crypto are going to have to intersect through Chainlink at some point, because there are other oracles, because that's what you would call Chainlink, is like an oracle, like a communicator, right, of information. There are other oracles, but no one has a tool suite set as complete and thorough as Chainlink as of now. So that's what, and then plus Chainlink has first mover's advantage. So someone would have to come out swinging very fast with offering more than Chainlink to really, and build up the relationships and get to work at an unbelievable speed to catch up or overtake Chainlink. So I really can't see somebody doing that, but of course you should never say never. So yeah, as of now, it's at $18.26 per token. So it does appear obviously way more expensive than other crypto tokens, but it's real, guys. This is like, I would say it's almost the equivalent of having been able to invest into Facebook or Microsoft back in the day if you had access to getting in early at a good price. Like, think of it that way. Chainlink is a proper blue chip. Like, it's like Bitcoin, Ethereum, Solana, right? And then like Sui over here in like fourth place in terms of like your solid, most powerful, like, and widely used blue chip sort of stable coins. And of course, like digital gold for Bitcoin. But below that, then you have like tokens like this, Chainlink. In that order of priority, I would personally put Chainlink. But that's of course not financial advice. And that said, guys, that's a wrap for today's video. I know it was nice and short and sweet, at least I hope so. Please let me know if you have questions in the comment section below. And I would encourage you to go check out and do some reading on Chainlink. Follow them on X. Go read about their partnerships. They're making real moves. It's a real project, in my opinion, worth investing into for the long run. So, all right, guys, take care, and I'll catch you in my video tomorrow. Bye.